Hey, what's going on, everyone? Welcome back to another Trndsttrs podcast. This is with my man Harrison Quinn, financial advisor. We're going to be diving into all things personal finance, budgeting, and obviously business advice, talking all things new wave with a trendsetter, right?
That's right.
I guess to start, every podcast always starts and they ask, what do you do? And we go down this rabbit hole of all this nonsense. Rather than telling me that, what is the impact of what you do for your clients?
So I work in the financial planning and wealth management space. And I would say my high-level overall goal is simply to have and structure the finances for someone who, when they want to, quote-unquote, retire.
That makes sense. And so the impact of that is a healthy, lifelong retirement, right?
That's right.
And one that you're going to have the finances for.
Yeah. Because you don't want to be working your entire life, get to age 65, and then have no money to spend.
Yeah. So let's say I'm 22 years old. I just graduated college. I just took a job paying me $60,000 a year.
Congratulations.
Yes, of course. What is the advice you would give to that individual in that scenario regarding their retirement, who are likely thinking about more so amassing wealth in the short term to fund that side hustle they want to start, that new business, Coachella or some trip to like Malaysia or Singapore, who knows what? What's the advice you would give to that individual?
So your first invested dollar is always your most valuable. The most valuable asset when it comes to investing is time. So if you're investing at 18 years old versus 30, that 18-year-old dollar is going to be way more valuable than that 30-year-old dollar.
Yeah.
So just investing early and investing often. I think it's super important just because of the way we live our lives now to enjoy life, have a balance, spend some money, maybe go to Coachella once in 5 years, not every single year. But really, creating good disciplines early on as soon as possible. I wish somebody grabbed my face at 16 years old and forced me to open up a brokerage account to start investing because it's much cheaper to invest then simply because of compound interest.
Yeah, and I wish I would echo the same advice to my 15-year-old self. I was mowing a ton of lawns, making a ton of money, and just spending it on nonsense.
Yeah.
And
I feel like a lot of people are in that same situation.
It would have been cool to have a little bit more startup capital, for sure.
That's right. That's right.
But we're here now, so that's all right. And so what is changing most in the financial industry? I know there's plenty of ways to go about these topics. I know robo-advising is something that we see on the horizon. New financial apps, a lot of that's a space we've worked a lot within as an agency as a whole that Gen Zs and millennials are starting to prefer.
Yeah.
What's changing with financial advisors, and where do you see the industry going?
Definitely technology is a huge thing. I think that robo-advisors will take up probably the bottom 10 to 20%.
Got it. And when we say bottom, those with less, because it makes more sense. Got it.
Yeah, exactly. Yeah. So, once you're coming out of school, making the $40,000, $50,000, $60,000 a year, and those people who won't require a ton of attention and time, I think will be absorbed over the next decade by robo-advisors.
Got it.
Just because it makes more sense, and fee compression is really a big part of that. I think the high net worth space will always have a place for face-to-face, in-person. My job is really a relationship-based business.
Yeah.
I've heard older advisors tell me, and I've told other people as well, if you want to be a good financial advisor, go get a psychology degree and I'll teach you finance.
Yeah.
I mean, it really is just relationship-based business, and especially when you're working with, new companies and partners or husband and wife, anything like that, it's, finances are always very emotional.
And regarding that future that's going to exist with technology as well as this next generation coming into fruition, in terms of financial advisors, you're obviously on the lower end of the spectrum when it comes to age.
For sure.
You're one of the more younger yet established financial advisors, certainly in the Kansas City area.
Yeah.
Shout out to our guy Ryan Odom from Mass Mutual LA. Yep.
There we go.
Yep. We'll tag him in this, whenever we clip it. So there are some younger advisors as well, but obviously the burnout rate is really high. So there's concerns there. But what are you most excited about with this next generation coming into fruition? I know a large part or some of your focus has been on helping younger individuals like our team members, right?
That's right.
Get connected and start saving from an early age. And so is that something that you're actively helping to support?
Yeah, so definitely working with most younger folks don't have a ton of money and does not have the most immediate upside for myself to generate an income.
Yeah.
But I'm young and I like working with young clients because I'll be their advisor for the next 30 years. So I think that's really important, again, just starting early and investing often and getting that going. But yeah, I forgot your other question.
Yeah. So, and something that's going to be a really good topic right now. Entrepreneurship is so hot. Like it is the thing to be. Entrepreneurs are like cooler than athletes now. Everyone is out here trying to start a business or a side hustle or this, that, and the other. Which, whether or not we should be encouraging that further, we can leave that debate for another time. But I think the question is, financially speaking, I can speak for myself as a business owner. What has helped us most in terms of our growth over a long period of time has been taking care of my personal finances beforehand.
For sure.
And I knew that getting in, and these guys know, like, I'm a scrapper. I don't spend money on anything I don't need. I don't go out and spend $4 a day on coffee. I'll eat food off the floor. I intermittent fast every day, so I don't have to buy breakfast and lunch. So, and what that has enabled me to do is now I have to pay myself a less salary, which then allows the business to have more money, which allows it to hire more great individuals, which then 10x once they get put into the business. You know, that $3,000 a month hire is going to make $30,000 a month if you give it some time.
That's right.
So, what's your advice to those people getting into entrepreneurship, into business regarding their personal finance?
I think the correction for most people as well, most people are not entrepreneurs when they think they are.
Yes.
They may have entrepreneur-like tendencies. They may think it's kind of cool and sexy to call themselves an entrepreneur, serial entrepreneur, but in reality...
Let me tell you, it fucking sucks. Like, if you're getting in this because you like the title entrepreneur, that is like the worst reason ever. Because once you're actually in it, you're going to hate it.
Truthfully, I mean, and the success rate's so low. You know, people think that they don't want to be bound by, you know, a 9 to 5. Well, as an entrepreneur, as you know, you're working 24 hours a day. Always on call, always doing that. I mean, a lot of advisors, most advisors are, you know, entrepreneur-like individuals, meaning they make their own schedules, you know, answering, you know, phone calls and emails at 10 p.m.
Let me ask you about that. Passive income. What is this notion of everyone trying to build passive income? Love it. Love it. Makes total sense. All on board with it. Does it even exist?
So there's a ton of misconceptions right now with passive income, and we've spoken a little bit about it. Starting with real estate. So my family's background is in real estate, and I've grown up, you know, learning about that, and I actually have my real estate license, not actively used. But real estate is not passive income. Passive income insinuates that you have to do nothing and it costs, you know, nothing additional, but you have to pay, you know, additional taxes. You have to pay a professional to manage the property, to get the rent, you know, the market fluctuations up and down. Like
what happens when the professional you hired quit or colludes with the person on the leasing and brings the whatever down, or they destroy the place, but they, you know, like, you're still having to put your hands on stuff.
And for all those listening, a true recommendation is, if you're trying to get into real estate or passive income or real estate investment, unless you are a construction or real estate professional, you are strapped with cash or you have a ton of time. You know, if you have one, but preferably all three of those, get into real estate, get some rental properties, all that kind of stuff. But if you're working a full-time job at Cerner and you have no real estate or construction, you know, experience, stay away. One of the only true passive incomes is buying a dividend-paying stock. You know, Bank of America has a strong dividend. You purchase that stock, it'll pay out quarterly dividends. And if you don't want to reinvest that and take that as income, that is more or less true passive income. But all of the...
I hear the same thing from the digital marketing space. Like, and I think some people think of that as me now that we have like team members, right? It's, oh, now you have team members, Jake, you know, come hang out with us tonight. Like, they'll get the job done and whatever. It's like, as much as I love my team and the employees here, like, I don't know if this place will be burned to the ground or not if I leave for 24 hours. And that's a concern, as well as if I'm in this just for the money, if I'm in it just for that, how am I going to get through those rough patches?
Yeah.
I think something that's so interesting is like, if I'm in this just for, like, what I see finance as, from my perspective, as someone who's very not money or financially, eccentric, is I see it more as an enabler for freedom of activity and freedom to do what I'd like to do, and to build and invest in my own businesses more than anything else, not as something that I can have a wad of cash and go to the club and spend.
Yeah.
You know what I mean?
Yeah.
And so I think there's this notion that saving money or that financial advising is helping people stack cash, when in reality for someone like me, it's like helping me like handle all the 100 different financial situations I personally have going on because I'm a business owner, and then best enabling and setting myself up for a future in both a short term and a long term. And so I think it's important to know that. And so for all those right now that are like me, getting spammed by financial advisors, I will get 6 calls from Northwestern Mutual just in this podcast.
Yeah.
I swear to God. And so what is your advice to individuals regarding selecting their financial advisor? Or they want to get started, they want to start that conversation, but how the hell do I know who to trust?
Yeah. The best part is you can get a bunch of free advice before you pay for anything.
That's true. I like that.
You can go, interview different advisors at different firms, but at the end of the day, I truly believe that is a relationship business, and a client to advisor relationship should be on a personal level. There should be a lot of trust there, and you should ask all the questions, and they should be able to answer those without any conflict or any problem answering those, with being transparent according to fees, how people are getting paid with commissions, and all of that kind of stuff. I think that the reason why people get hit on, especially young people, by advisors is because you have the entrance of new advisors, and all they know are the people who they know, and so they call all of them up, and it doesn't work, and then they drop out 3 months later.
Yes.
Not to say you shouldn't give any new guys a chance, because people, gave myself a chance. I've only been in the industry for just under 2 years. So it's important to do that, but it's more important to vet your advisor and have a trusting relationship. Whether they move firms, whether they get out of the industry, knowing that you'll be taken care of regardless whether it's them actually taking care of you or not.
And it's such an important decision, particularly for individuals that need flexibility or are looking to move and kind of change things up. I know for a fact, if I were to personally just get stuck in like a normal structure or a normal financial plan that you would give someone that's young, that wouldn't work for me. Because I'm someone that I could have the potential to put a lot of money towards my retirement now, but I can't do that because, well, I don't want to do that because I'm trying to run and build businesses and buy something new, and I'm playing more of like a 5-year window. I'm not thinking about retirement just yet. That's more of my asset. And so,
well, and that's a really important factor as well, is people will see me out or shoot me a text and say, hey, where should I invest my money? Or how should I handle this?
And there's no right answer.
Or I've got $50,000, and I go, well, tell me about your entire life. Because any good financial advisor or financial planner should take your current financial situation and your personal profile, build it up, and see where you want to be in 40 years. Even if your life is changing like this, you still have a goal. And it's important to define that goal and then to reverse engineer that into deciding what you're going to do right now.
And so I think everyone's goal in life, to a certain extent, I wouldn't say the goal, but everyone would like to earn more money. Everyone would like to be a high income earner in a top 33% or top 10%, maybe a top 1% one day. For those individuals that maybe they're fortunate enough to get there, or maybe they'll listen to this right now, what's the advice you would give to high earners or those that are soon to be high earners?
Plan for it if you're not that already.
Interesting.
I think it's really important to, people have dream boards or vision boards or goal boards or whatever, and that's important. Everyone gets motivated by their own practices, but act like it. Save like it, invest like it, like you're going to be a high earner. And if you are a high earner and you're not already doing that, start doing that.
One of my favorite quotes is always like, if you can't save money when you don't have it, you're not going to get it. And then when you get it, you're going to be like half the NBA players in the league, right?
Yeah.
Broke after 10 years out of the league, you know?
Yeah.
And so that's such a drastic problem. I'm curious to hear your thoughts on that.
Yeah.
The NBA is kind of my favorite league, but all the leagues around, there's such an issue right now with those who make a lot of money when they're young and then they retire per se or kind of start half-assing the whole career work thing.
Yeah.
But they've accustomed themselves to such a high lifestyle that then they have trouble bringing that back down to their annual salary.
Yeah.
So what's your advice to athletes, or what do you think the epidemic is that exists?
Yeah. I think we definitely live in the social media era to where if you're an athlete, you got to have a Rolls Royce, you got to wear everything designer, everything expensive, and it all comes down to just spending money. And saving money is the opposite of cool. Which is part of the education part and the trend that I want to transform and a little bit disrupt the industry. Working with entertainers and athletes and all of that, venture capital guys and startup, entrepreneurs, is saving money is cool. Investing money is cool. Like dealing with your finances like an adult planning for the future is cool. It doesn't mean you can't buy anything fancy or buy anything new, but it needs to fit within your plan. And I think that a lot of kids who have risen to the very impressive status of professional sports, the majority of people were never taught in a family sense and then in their organized education careers to manage money.
And I think ultimately it's on them to figure out too, because
for sure.
I think today's athletes sometimes maybe rely on certain managers a little bit too much, as if that manager is actually having their best interests involved, which is not always the case, you know, as we saw with the Ball family. I think the one who I would say has done the best job across the board, whether he's the GOAT or not is up for debate, but LeBron James. The dude owns his own pizza company. He owns his own media network. He owned he refused the Reebok deal for $73 million when he was 17 years old. Instead waited out for Nike and got that. And again, once you have a lot of money, is LeBron James ever going to have to stress about money? No. But what's interesting is he's positioned himself so well. I'm sure he's gone out and spent money plenty and had plenty of fun.
Definitely.
But for the most part, he's building new schools. He's coming up with new businesses, starting media channels. That didn't happen just because of him making money. Certainly making money is there, but it's also him saving it, him treating it like a business. I know Kevin Durant actually, think of him, what you will, but I know when he got involved playing with the Warriors, he started his own VC firm. And so he started investing in local startups and growing those, and I know he's found an incredible return there. And
none of that happened without creating a plan.
Exactly.
And plans change, life changed, things change. But coming up with a plan and then reevaluating it, on a quarterly basis, semi-annual or annual basis. But the biggest thing is treating saving money like a business. Investing money like a business, whether it is or actually not.
Okay. Now let's talk about my man Johnny. Johnny's over here. He reads a few articles about the news. He thinks he's got a hit on the market. He knows exactly what it's going to do. He's telling me to invest in this. Why should I not listen to Johnny?
Proven time and time again, and I'm not going to give any, awesome stock tips. Super sorry. You can tune in to my man Jim Cramer, Bad Money, every day. But the problem is what's been proven, over many years is no one can time the market. Hedge funds may be able to do it for 1 year, 5 years, 10 years. Again, past that long-term investing, no one can time the market. S&P this year is up 26%. No one knew that 12 months ago. And again, if they did and they planned for it, they can't do it again. They can't replicate that. And the biggest thing is whether it's an individual or an advisor or anything like that, if they're promising you returns or if they're promising you a good pick or that they can predict the future, run. Because they're either criminal, it's a Ponzi scheme, or they don't know what they're talking about.
That makes sense. Something that I always find, and so my dad's actually a financial advisor with Buchanan. That's why we get to have really good conversations. That's why I value your opinion so much, because I can bounce it off to him. I'm like, oh, Harrison does know what he's talking about. He's not like the Northwestern.
A little bit.
He's not like the Northwestern people texting me all the time and all this nonsense. I feel like I'm always sandbagging Northwestern.
Yeah.
But honestly, I'm sure it's
a great company. It just comes with a lot of young new advisors where the attrition rate is very high.
Yeah, we're working on that with the client right now, actually, to solve that. But so
we're counting on you.
Yes, it's needed in the market. I tell you that.
Yeah.
Something I'm curious to hear as let's play a little finish the sentence right now.
Yeah.
The number one strategy I'm going to deploy in 2020 is going to be what?
Number one strategy.
There's too many, I know.
Creating a plan. Whether you do it yourself and you Google for 12 hours and you figure it out, you call a professional and you get free advice, or you call a professional and they actually, become your advisor. Mm-hmm. Just starting with a plan, creating it, and moving forward with it. Just beginning.
That makes sense. Yeah.
Important.
You're not going to get to your wealthy point without that.
Yeah.
That makes sense. What inspires you most day to day?
The value that I will and hopefully potentially bring my clients 10, 20, 30 years down the road. Mm-hmm. I'm working with a lot more older clients than I thought, mainly because my pitch is, does your advisor right now, if you're 60 years old and your advisor's 60 years old, does he play more golf or do I? Is he more worried about his retirement or yours?
Yeah.
And if people think I'm young and inexperienced, maybe in comparison to their current advisor.
Yeah.
But I know that I can work many more hours, play less golf, and be less focused on my personal retirement.
Of which you will. Check the Instagram story.
That's right.
Man's in the office late.
Yeah, I'm not even sure what the question was.
Most inspired by, yeah. So you are inspired. I mean, that's so great. Like, you're inspired by the actual end result.
Yeah, the value of this is what I'm going to do for the next 30 years and making sure that my entire client base gets there. And I tell people and joke all the time that if all my clients aren't rich, then neither am I. So
that does make sense.
Yeah, I'm motivated by your success.
Yeah. Now, I think the final thing, and then maybe we run down a rabbit hole or two, or maybe we call it quits. What is something that I can't wait for? What is that? Is it something around the corner? Is it a new offering? Is it a new approach you're taking? Is it you can't wait to get your name out there more and do something, more unique, or continue helping individuals? This one's a tough question for financial advising.
Yeah. I'm always excited for the future.
Yeah.
I believe that more people become more informed every single day. And if I approach a prospect who has a spreadsheeted budget, has some stocks he likes, and has maybe an investment account himself that he's done some speculation trading on, is way easier to sell my services and my professional advice than someone who has nothing.
Yeah.
So if
it's an education game.
Yeah,
100%.
If social media can disrupt and shake up young people to start saving, start investing, and become educated, honestly, it makes my job a lot easier. Some people think that it replaces my job. Well, if it does, then...
Let's talk financial education for a sec. I am hot on this topic.
Yes.
Ponder me this. Why is it that we are teaching elementary and middle school kids, even high schoolers, why are we teaching them shit about soil and the solar system and correct grammar, or learning certain terminologies or vocab or other languages? Other languages are great to learn. Are you going to learn that in a once a week Spanish class? Maybe not.
Probably not.
Why are we quizzing today's youth on the wrong topics and not teaching them arguably the most important thing to learn from a very young age? Is there anything more important than having your finances in line, right?
Not really. I'm not going to spit out the numbers because I will be wrong, but there's a massive statistic on the stress in relationships and young people. Is finance, and their their thrive for financial freedom is the number one on the list for stress indicators. the problem with organized education, and the person who can figure this out is much smarter than me and more focused on it. But it's all memory based. Yes. Right? They ask you, how many planets are there, and apparently Pluto's no longer a planet, which is bullshit because I should have gotten that answer, correct, because I didn't think it was a planet. It's way too far, way too cold, way too small. Yeah. Anyways, neither here nor there. But I do think whether it's a huge conspiracy to keep people poor in organized education, I don't know. But I just think that no one has done it correctly at a high level to successfully implement it into organized education. The person who does that, hats off and cheers, because if kids start investing when they're 12 years old, 15 years old, 20 years old versus now it's 25, 30, and 35 waiting for me to call somebody up and rattle their head, we'll be a lot better off.
Yeah, and I think it's something that we're seeing with new private organizations. Financial advisors have been doing so for a long period of time. They've been limited by compliance, which is
favorite.
Yeah, our favorite, right? It's a real concern. I get it. I think, and this is compliance across. It's not limited to just financial. It's everything for that matter.
Yeah.
When we are sacrificing potential education and even marketing for our existing advisors to simply avoid compliance entirely and not have to deal with those potential problems, I think that's when it creates issues, because so many of today's societal problems can be solved just through adequate financial planning and financial education. And like you said, it being a high stress factor, if you don't have your finances in order, there's not a whole lot of shit you can do. If I can't take my wife out to eat, if I can't put food on the table for my family, if I can't do all those hypothetical things for myself, then those are going to cause significantly more problems. And
people say money can't buy happiness, but it's a lot easier to be happy when you have money.
Exactly. Yeah. It's the freedom of it. It's not. Now I bought a Corvette. Now I'm happy. It's no. I know for a fact that for the next year, if I go out and break my leg and my insurance doesn't help me, I can live.
And the majority of bankruptcies, I think it's like north of 60%, is from a medical occurrence or a medical emergency.
Something you literally can't plan for.
You can't plan for it, and that just means that people don't have adequate savings in a savings account, truly liquid cash, and they don't have any sort of, they're not paying for health insurance because they can't afford it because they're not being financially savvy. And that's horrible. I mean, the fact that that's in the United States, people are going bankrupt because of a medical.
Let's have that as the final topic. How come today's young people, millennials started this trend, so I'm going to blame them. Gen Z is not necessarily helping. Why is it that we have such a need, such a desire to spend money on stupid shit? I see people go out to the bars, go out to a concert, to go take a vacation, whatever, and spend $2 or $3 grand, and then they DM me the next week and ask me how they can start their own business, and I go, well, you can't. You can't. But how much did it cost me to start mine? $250. Go buy an LLC from the state of Kansas. Don't use a lawyer. Just go onto their website. It's going to cost $200. Go get a Wix website, $7 a month. Then go get one more CRM system tool, whatever. That's under $250. And yet, people out here spending $250 one night out. And then asking me, how can I start a business? How can I afford to hire more people? How can I start doing this? So how do we get over that? How do we get over this Instagram flex that seems to be controlling people's entire purchasing habits?
It really is ridiculous, just because through high school, I'm 26 years old, didn't really experience social media. We had Facebook, that was for our awesome prom photos and other photos that should never be released. But people...
OG Facebook.
That's right. But people spend money on things, and I'm pretty sure it's a Fight Club quote, people spend money on things that they don't need to impress people they don't like. Or people who don't like them. And for whatever reason, that trend, it hasn't started with millennials. I think it's always been a thing, derived from insecurities and all that. It just has been magnified through the social media platforms where you can see what some influencer guy in Australia and Sydney is driving his Ferrari, and you're like, man, that 22-year-old's killing it. He's got so much money, when it's probably a rental car and the kid works at Walgreens. Or whatever the Australian Walgreens is. But truthfully, I don't know how to answer that question. I don't know how to get people to stop spending like that. I think it's an emotional, psychological problem more so than a spending financial problem.
I think it's whose opinion do you value?
Yeah.
For myself, a lot of my initial peers, I'm only 20 right now, so are like existing college students. Yeah. So I leave school, go start the business, doing well, debt-free, profitable the past 2 years, since its existence, right? Yeah. Have we made millions of dollars? No. But have we done pretty good? I think I would say so.
Yeah.
And so I'm always asked, like, why I don't flex a little bit more, or why I don't like show off. Or the best I hear is like people ask me all the time, like, are you even making money yet?
Yeah.
And I'm like, no, I just pay for shit with, I just pull money out of a tree, and that's how I pay for stuff. The reason being, if I gave a fuck what Johnny and what Stacy thought about me, I'd still be in school.
Yeah.
Because if I actually cared what they thought about me, I wouldn't have gone and done the whole business.
Yeah.
I care about, there's probably 5 people that I give a fuck about their opinion.
Yeah.
None of which are going to be people that are
impressed with your Louis Vuitton purchase.
Exactly.
Or your Coachella.
So I think that's what it is. It's we need to stop taking advice from our peers, from people that are around us, because if we want to get here, we should be taking advice from here.
Yeah.
If we want to get there and we ask like our friend that's also in the shit with us that doesn't know what they're doing, that's not the right person to be listening to.
Yeah.
Don't get tennis advice from someone who doesn't know how to play tennis.
Yeah.
Don't get financial advice from someone who doesn't have their own finances in order.
Yeah.
And so, I think across the board, that's something we gotta solve. That.
Yeah. I think it's a personal, emotional, and psychological issue that's derived from caring about people's opinions, feeling like the fact that I get 10 likes on this photo or 100 likes on this photo, doesn't really matter. It's about being self-aware, understanding who you are and what it takes to get wherever you want to be.
Yeah. Well, I appreciate having you on. Yeah, you can find Harrison on Instagram at myfinancialadvisor. Awesome domain. Harrison Quinn on LinkedIn, and I'm sure Facebook and Twitter and all the other nonsense. Anyway, go ahead and message him if you're on the look for a financial advisor or trying to get your finances in order.
That's right.
And thanks for coming on. Appreciate it.
Thank you.